Hi, my name is Robert Mogo. I'm the educational partner at FXPesa Thika, and today we'll be having a look at NFP. And this is something that as traders we get to know that NFP is key. It's a very important economic indicator that helps us analyze the US market. And basically, the NFP comes out every first Friday of the month, but this month is quite peculiar as we head into March. It will be coming out on the 8th of March, and so we see there are times that it will not always be the first Friday, right? So this is one of those situations that arise. So what is NFP really? Basically, it's a key economic indicator for the US economy, and it represents the number of people who have been employed minus farm employees, government employees, non-profit employees. And so what really happens is that when the number is out, employment, remember, for the US government is really key because it tells how healthy the US economy is. So if the numbers come out stronger than expected, the dollar will increase in value. And if the numbers come out lower than expected, then you expect the dollar to go down. So this will affect even bonds, it will affect the stock market, and so it brings in a lot of volatility. And so my goal is to let you know that as you move forward, how do you get to trade NFP? Because of the volatility, increased in spreads. We know guys who use pending orders, but then again, at times the pending orders will fail you, right? Because of the slippage. So if price was to be activated at 1.2000, it's activated at 1.2010 because of the slippage and the volatility. So our assignment today is to look at that and look at what will be your expectations, what will be your reactions based on the news that will be coming out. So today we are going to look at a strategy, and that strategy is what you call the pullback strategy. We could also use the breakout strategy to trade. When you're looking at the breakout strategy, this is where you use pending orders. For example, a buy stop and a sell stop order, right? So if, let's say, you anticipate that the numbers will come out, let's say, positive, the employment numbers will be positive. So you expect the dollar to go up. And so if you're trading, let's say, USD CHF, you can use now the buy stops. So the market will go and hit your buy stop and that order will be activated. But then again, now there's this other risk. That volatility could lead to slippage. So if your trade was to be activated at a certain price, it's activated at a higher price. And that will also affect also your take profit and also could affect also your stop loss. Then there's also now, if let's say you expect the numbers to come out negative, so of course you expect the dollar to weaken. So that means if you're trading, let's say, USD JPY, right? So the dollar will drop, right? The bears will come in, sellers will be in charge of that market. And so this is where now you can take advantage of that move by using a sell stop order. So a sell stop order is an order you place below price such that when price gets to that price level, it activates the sell and price continues dropping. And so remember, once again, there's that risk that when you're doing that, take note of the volatility, take note of slippage, take note of widening spreads because of the new market orders coming in. Because you see, there's so many guys who will be trading in that market. Basically, I know, like, for example, there are some guys who wait for NFP for a whole 1 month. So these are guys who are coming in with big monies, maybe let's say $100,000, and they're ready to maybe go all in on that particular setup. So expect that even from the institutional traders, from the big banks and all these other guys who are trading big monies. So your work as a trader is to make sure that you maximize on that, but then again, make sure that you understand the risks, and those are some of the risks that we have outlined. Then, of course, you need to look at the risk management techniques that you're using. Always remember, a stop loss, you can never go wrong when you're using a stop loss, right? Because a stop loss protects your capital from ruin. So just in case you get into such a trade and then there's some kind of market reversal, then you have a stop loss to protect your capital so that you're able to trade next week, right? Because we know NFP is on a Friday, so you want to come back Monday and look for more setups with capital. So unfortunately, we've seen situations where guys go all in on an NFP, take losses, and next week now you have those awesome setups playing out and you don't have capital, you're not able even to fund your accounts, and so I mean, you're so frustrated because of the nice trade setups that present themselves. So make sure that risk management is the holy grail of trading. That's something that if you come to, let's say, FXPesa Academy Thika on Thursday, and every other FXPesa Academy, every Thursday we'll talk about risk management, right? So take note of that. Now, if you were to look at an analysis on NFP, probably you would want to look at other currencies. Will it impact, let's say, the crosses? Yes, there's a possibility. A currency like CAD JPY could be affected. So always take note of that when you're trading, that you don't really have to do with the majors, but also the crosses will be impacted by that. Now, other economic data to consider, of course, unemployment is something that you'll also need to look at later. These are some of the news that will be coming in every time. So make sure that every time when you wake up, have a look at your economic calendar. Go to my FX book, go to Forex Factory. Just make sure that you know that today at what time. For example, NFP is 4:30 Kenyan time, you know, GMT +3. So just make sure that you know that at that time there'll be some news that could impact your positions, so that you're not caught off guard. And that's really very important for every trader. You don't want to be in a position you're in profit and yet you hadn't checked out the economic calendar, and maybe let's say you're 50 USD in profit and you didn't use maybe a stop loss to break even or something. You know how you need to manage your position. You see, trading is not just about buying and selling. You must manage your positions such that you're able to book profits on the go. So this is where you could use a trailing stop loss, or you could use a stop loss in profit, or a stop loss at break even, so that when the market comes back, it will just hit your stop loss and you'll close maybe +1, +2 pips in profit. So that is something that you really need to understand. So during NFP, price tends to go to liquidity areas. You know, these are areas where you have some orders. Let's say maybe yesterday's low, or yesterday's high, or last week's high, last week's low, last month's high, last month's low. So those are specific areas where the market tends to go, especially during NFP and majority of the news. So if you're able to map out those areas before, you know, this is something that you'll do every time you wake up in the morning, right? You're analyzing your charts before London session. We know London session and New York session are the most volatile. This is where you'll see a lot of players coming in, courtesy of, you know, the traders in those countries and the big firms in those countries. And so you would want, before the markets opened at maybe 9, 9, 10, you're analyzing, you're mapping out the liquidity areas, so that you're looking at possibilities. Where could the market be headed? Could we see a hit of yesterday's low, maybe a hit of yesterday's high, depending on the currency? So once you do that, then you're able to seek opportunities. Now, we also need to identify what type of a trader are you when you're coming into trading maybe NFP. You must, are you a scalper? You know, a scalper is someone who will probably be going for 20 pips, 10 pips, and you're out. Maybe this is something that will happen within a minute or 2 minutes, right? Depending on the numbers, right? So make sure that you understand your strategy. You don't want to be a scalper, then you hold your positions over the weekend. Right? So be satisfied. This is where, like, it's always said, you must have a trading plan where, like, you're able to say, you know what, I'm a scalper. I'm just going in for 20 pips, 30 pips, and I'm disciplined enough to go for that. And that's it. I'm done for the day. Don't be greedy. Let others take off the rest of the profits. Walk out with your 30 pips and call it a day. So if you're a swing trader, of course, you know, like, you want to hold your positions up until next week, right? So make sure that through those areas that you had mapped out, the liquidity areas, once that those areas are hit, then look for those opportunities and hold till the next liquidity area. Yeah. So let's say you're looking for opportunities to sell. So maybe you'll want to look at yesterday's high, last week's high, last month's high, or even the weekly high, you know. So when price gets to those areas, then you can take a sell and maybe exit, maybe yesterday's low, last week's low, the weekly low, last month's low. Yeah. So that is something that you might want to do. So in summary, take note of your economic calendar, my FX book, Forex Factory. Look at what's going to happen on that particular day. Look at the 4:30 news, GMT +3. Especially the US dollar will, the volatility, we normally say the dollar is king. So that means you really want to know what's happening in the US. So have that, map out, know that today NFP will be coming out and this is the game plan I have. So you already have that trading plan that tells you, before you buy, these conditions have to be met. Before I sell, these conditions have to be met. And then once the conditions are met, how do you protect yourself? Make sure that you have a stop loss. Make sure that you have, of course, a take profit is also something that, you know, there's so many guys who go in, buy or sell, but then they don't know where to exit. So a trade will move 40 pips, 50 pips in your favor, and you've still not closed your position. So what happens is that when the markets start going down, the next time you're looking at your trades, you are plus 10 pips in profit, and you're questioning your sanity, and you're like, I wish I would have closed 30, 40 pips. What that does is that it affects you psychologically. So next time you'll be afraid, you'll tend to have a messy way of dealing with your trades, right? So have a structured way, your trading plan that clearly outlines, if you're going for 20, 30 pips, please hit your 20 pips, 30 pips, walk away. So let's look at an example on how you can use a breakout strategy during NFP. And right here we have GBP USD. So currently we can see prices at 26.36, and maybe you've mapped out your areas and you've realized that price is already at oversold, at that region, and so you're looking for opportunities to buy this market. So when the news are coming out at, let's say, 4:30, what you can do is you can place a buy stop order. So what you need to do is open up a trade, go to new order, market execution, pending order. Over here, use the buy stop, right? And then volume, whatever volume you want to trade. Let's say you want to deal with 0.50 lot size. So make sure that you outline the price that you want to buy GBP USD. So let's say 26, maybe 40, price that is above the current market price. And then stop loss, have that maybe at 26.20. So remember, you must put a stop loss to protect your capital. And then the target, maybe here you're going for, let's say, 40 pips, 26.80. And then say place. So you can see at the bottom here, the order is now placed. So we can see it's already above price. So when the news will come out, what will happen is it will hit this area and rise. So in this case, the anticipation is that the dollar will be weak. So for example, the numbers that were expected, let's say the expectation was that the numbers will come out at, the expectation of the majority of the traders was maybe 200K. And then the numbers come out at maybe 190K. So you see that's a drop. So what traders will interpret that information to mean is that the US economy is not doing so well, and that's why it was not able to give out the 200K employment numbers. So people tend to lose confidence in the dollar and they'll dump the dollar. And so in this case, GBP USD will shoot up. So in this trade, remember H1, you have your stop loss, and then you have now your take profit. Now, this is the risk I was talking about. There is a risk that this trade could first hit this area and then go up, right? That's a risk. There's also now the other risk where you must consider that your current market price is 26.40. So there's a possibility that this trade could be activated at 26.50 instead of 26.40. 10 pips above it. And then your take profit is above there. So there's a possibility also, depending on the volatility, the take profit could be closed at 26.85. You see, the interesting thing is that when you have higher profits, no one complains. Yeah. And also, back to the stop loss. The stop loss could, if the volatility is so high, the stop loss could be closed at 26.15 or even 26.10. So those are some of the risks that you could encounter. So this is what you call the breakout strategy, where you want to take advantage of the market when the news come out, in this case negative, it will hit and continue rising quickly, and within maybe 10 minutes, actually 5 minutes, it will have closed your take profit orders, or even your stop loss, depending on the volatility. Now let's look at a case scenario where the market comes out bullish for the dollar. So let's look at USD CHF. So in a case where you want to take advantage of a market that is dropping, so we will want to look at a case scenario where the dollar comes out positive. So let's say the job numbers, the expectations were that the numbers will be at 200K, and the numbers come out at 220,000, right? So that means the dollar will strengthen, and in this case we have gold over here. So gold, what will happen to gold is that it will drop, right? So how do you take advantage of that? Using the breakout strategy. So you come in here, go to trading, new order, market execution, go select pending orders, go to sell stop, price, you want price at 20, 25, maybe 0.40. Stop loss must be above that. So let's say 20, 25.95. And then make sure that you outline your stop loss. Take profit also. Now here you go for maybe 24, right? So place, so we can see those two orders have been placed. So what have you said basically? So if you go to lower time frames, we should see this. So the sell stop is down here. So the market, once the market comes down here, it will hit the sell stop, and now this will be now a sell order, and it will go now to your take profit target of 24.05. So basically this is a quick way of going in and going out, right? So that's it on breakout strategy. So make sure that you understand the risks also, guys, that in this market, when news are out, then you could see a lot of volatility coming in, and that could greatly affect your position. So just make sure that you understand the spreads also widen during news, so it could easily take out your trades. And so I will encourage you guys to have a look at that. Go study more on the buy stops, sell stops, and see how you can take advantage of those strategies to bank some profits from the market. So I'll encourage you guys to subscribe for more on this analysis. Make sure that you follow Market Snapshot every day from 11. Make sure you're looking at the different videos that will be coming out on our FXPesa YouTube channels. And then of course, you'll want to visit our physical classes, Thika, Nakuru, Eldoret, Kitengela, and even Kampala and Nairobi HQ. Right? So we have classes every day from 1 to 2:30 every trading day, Monday to Friday, 1 to 2:30, 4 to 5:30. Pop in and get to learn more on the market opportunities. Otherwise, thank you guys. Have a peaceful day. Have a peaceful week.